Hi everyone. Home Depot reported fiscal 2022 fourth quarter earnings results this morning. I've gone through these figures and I've highlighted the key metrics from the report, and I'm going to answer if this report made Home Depot stock better for dividend stock investors. So let's get right into it. So overall, the home improvement boom has peaked. It's over. It's at the top. No more increases from here are likely. If anything, it's likely to come down year over year. In Home Depot's most recent quarter, revenue increased by 0.3% in Q4 to 35.8 billion. This was the smallest year-over-year increase in about 12 quarters. Earnings per share still increased to $3.30. This was up from $3.21 year over year. I think I could have used a better word than exploded there. Going up by 9 cents isn't really exploding, but there you go. That's the word I chose to use there. Maybe I was thinking about something else. Comp sales decreased by 0.3% in Q4. This is comparable sales in stores that were open for at least 12 months. So people going to the stores that were already open actually decreased by 0.3%. Customer transactions decreased by 6%. That means people were visiting Home Depot less often. The average ticket, however, increased by 5.8%. So people were going to Home Depot less often, but when they were going, they were spending more. And that's likely a result of inflation. The year over year increase in prices just means that people were getting the same amount of things, just paying more for that same amount of things. Further, beginning in the first quarter of 2023, Home Depot will be investing $1 billion in annualized pay increases. The company has done an excellent job hiring and retaining employees. It hasn't had the shortages that some other companies have had, and Home Depot is paying up to keep these employees that it's already trained, it's already hired. It could be less expensive for Home Depot to give these employees raises than it would be to let some of these employees go to a different company and then have to hire and train and retain a new cohort of workers. Cash flow from operations decreased to 14.6 billion in all of 2022. This was down from 16.5 billion in 2021, but nearly all of this decrease can be explained by a rise in inventories. Home Depot had to pay up for inventories, and now it's got way more inventory than it needs. So it chose to get this inventory earlier and just decrease the risk from supply chain shortages in the near term. It just wanted to say, hey, let's go ahead and get these things in our warehouses, in our stores, and if we need to, we'll hold on to them longer. Home Depot doesn't sell very many perishable items, so it doesn't run the risk of having some items that are going to go bad, right? So it can put it out. It can, if it doesn't sell, it can keep it out there. No big risk for perishable inventory at Home Depot. Home Depot did announce a 10% increase in its quarterly dividend to $2.09. That equates to an annual dividend of $8.36 per share. Home Depot has done an excellent job increasing its dividends over time. In fact, over the last decade, I think if you had bought Home Depot stock like 10 years ago, today your dividend per share would be nearly 6 times what it was 10 years ago. So that's how good of a job Home Depot has done increasing its dividend per share. It's forecasting sales growth will be flat for fiscal 2023 and operating margin will be 14.5% for the year. So despite the fact that sales growth is coming to an end for Home Depot in fiscal 2023, its operating margin is not going to collapse. It's doing a good job maintaining its margins. It didn't overhire, it didn't overspend during the pandemic. I always say that Home Depot is one of my top stocks in terms of how it managed through the pandemic. It handled it extremely skillfully, and I give management a lot of credit for doing that. So overall, if you're a dividend stock investor and you look at these results from Home Depot, it looks like it became, and also I would also highlight that after these results were announced, Home Depot's stock is down roughly 5% as of this recording on the day of this earnings announcement. The market was disappointed in the flat sales growth forecasted for 2023, and so that's causing the stock to fall after these earnings were announced. However, I wasn't surprised by that. I've been waiting for Home Depot to signal that sales growth is slowing, is turning flat, because it grew so rapidly during the pandemic. It experienced such a boom in home improvement sales. So for it to come down right now, that was to be expected. I was waiting for this, and in fact, this took longer than I thought. I thought the slowdown would have happened 2 or 3 quarters ago when the economic reopening gained momentum. So it's a little bit later than I expected. So if I'm a dividend stock investor and I've seen these results from Home Depot and the stock price is now 5%, 6% cheaper, this has made Home Depot an even better dividend stock to buy. So if I'm a passive income investor, I am now more interested in Home Depot stock. All right. So that's all I've got for this video. As always, I truly appreciate your viewership, and I hope you'll come back and see me next time for another video. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.